Welcome back to the Daily Bitcoin 5. 5 stories every day that matter to Bitcoin. Today on the Bitcoin 5, Treasury panic. US scrambles to keep 30-year yields below 5%. Let's go. Before the stories, the Bitcoin price check. Bitcoin is trading at about $79,100, capping off a spectacular month that saw the asset surge 24% over the past 4 weeks from about $63,800. The rally represents one of the strongest monthly performances in recent years, pushing BTC from the mid-$60,000 range back toward the psychologically important $80,000 level. Story 5. Bitcoin's 24% surge over the past week happened without strategy adding to its position, a significant development that demonstrates the market's ability to rally independent of the most prominent corporate buyer. The observation highlights that Bitcoin's price action is increasingly driven by diverse sources of demand rather than relying on any single participant. The rally was fueled by a combination of factors: ETF inflows, a weakening dollar, falling yields, and renewed focus on the fiscal dominance trade. Story 4. Strive adds 1,110 Bitcoin in $81.5 million. Purchase. The purchase represents continued accumulation by the Bitcoin Treasury company, even as prices climb through the $70,000 range, demonstrating conviction in the long-term thesis despite near-term cost basis concerns. Strive's average purchase price of about $73,400 looks prescient, with Bitcoin now trading above $79,000, providing an immediate unrealized gain on the position. The company joined strategy and other corporate treasuries in treating Bitcoin volatility as an accumulation opportunity rather than a risk to be managed away. Story 3. Michael Saylor's strategy announced major treasury moves, increasing its USD reserve to $5.10 billion, establishing a separate $1.59 billion USD cash pool, and repurchasing $136 million of STRC preferred stock. As of August the 23rd, Strategy holds approximately 4% of Bitcoin's total supply, with essentially zero net leverage, a position that combines massive Bitcoin exposure with fortress-like financial flexibility. The new USD cash designation is earmarked for general Bitcoin treasury operations, including acquiring more Bitcoin, paying preferred dividends and interest, repurchasing MSTR or preferred stock, and repaying convertible debt. Strategy's balance sheet and optionality continues to grow from strength to strength. Story 2. BlackRock's Bitcoin ETF absorbed $209 million in fresh inflows alongside $90.9 million into its Ethereum product, signaling renewed institutional appetite for crypto exposure. The Bitcoin buy represents significant single-day demand through the ETF wrapper that launched in early 2024, contributing to the broader market momentum that pushed Bitcoin back toward $80,000. The institutional flow comes as Bitcoin rallied nearly 24% over the past month, with ETF channels serving as a primary on-ramp for traditional finance participants. Story 1. Treasury panic. US scrambles to keep 30-year yields below 5%. The US Treasury is pulling out all the stops to prevent the 30-year yield from crossing 5%, escalating its intervention 3 times in a single week after initial efforts failed. On August the 19th, Treasury announced it would double buybacks of longer-dated debt from $2 billion to $4 billion per operation starting September the 9th, an unusual move outside the normal quarterly schedule. The relief lasted less than 2 days before yields reversed course. All eyes are closely fixed on the latest developments, and we'll be here every day to report what the latest news means for Bitcoin. That's today's Bitcoin 5. Let me know your favourite story from today in the comments below, and subscribe now so tomorrow's update lands directly in your feed. I'll see you tomorrow.